Alright traders, I'm back again with another video, and today I want to take time and discuss with you the Ichimoku outlook for the upcoming week. But right now I want to look at this chart and show you a few things. We're on the pound dollar daily time frame, and the main thing, traders, is these red lines on my chart. These are support and resistance levels. These are very important, traders. You have to have these on your chart, and if you don't have these, then you need to start putting these on your chart. I use the daily time frame to get these levels. I'm trading the 4 hour time frame. Some 4 hour time frames I put levels, but mostly these daily time frames are what I'm using. It gives me a bigger range for the market to move, and I look at those levels to take profit. I look at those levels for targets. They're going to be my targets. They're going to be my stop losses, and they tell me a lot of other things too. I'm not going to go into a trade right here, roughly right where I am now, and take a long trade right into resistance. If I don't know this line is here, I'm getting ready to take a long trade right into resistance. That would be not too smart. You need to make sure you get through that level. All right, so if you don't know that level's there, you're not paying attention to these levels, and then you see the market moving upwards, but then you wonder why it falls down, and you're stopped out and you lose, and think that the market makers have gotten you and taken you for a ride. No, it's not that. It's that you didn't even know you were trading into this strong resistance level here. So those are things you need to know. It's gonna affect your trading. But once I have this the levels drawn out here, I put my Ichimoku system on. But I want to also show you in past history we could look at these levels, and you could see how good these levels hold. When I drew these levels, I really wasn't even looking at this stuff back here. But that stuff back there, look where this chart lines up. I drew this level, and look where that level, this was a major support level here. Then I drew this level here without seeing this back here, and this was a major resistance level right here. And this resistance level was hit 1, 2, 3, 4, 5, and then it was a strong support level. You see it hitting twice. So 7 hits on this line from way back here. This is just from where I'm looking at, and this is from April of last year, 2012 rather, April of 2012. This line right back here all the way to here. So that's how relevant that line is. That's how important that is. So if you took a long trade right here, and your trade got stopped out, look at, you traded right into this strong resistance and you didn't even know it. So you need to know this. All right, so that's all I could tell you guys. It's very important. And then I use those levels also to be able to get into a trade. Those levels are going to help me to know where I want to get into my trade and where I want to get out of a trade. So you got to have those levels on your chart. All right, so then after I draw my lines in and put all those in and know where my levels are, then I put my Ichimoku system in here. And then on the daily time frame, you can see we're in a nice bullish trend upwards. We never came below the cloud, hit the bottom of the cloud a couple of times. So we got into that strong, and that cloud lined up with a couple of these support levels. See? Right there. Right into that support level. Here's the cloud again, support level. Now don't look at support and resistance as an exact level. These are pretty close. The market's not going to always come exactly to that level and hit it and bounce off. It could miss it like it did here, or else it could overrun it and then come back down. So usually support and resistance is a zone. If you look at it just as a line, you're not trading that line, you're trading that area, that zone. But that zone is maybe 10 to 15 pips wide, or whatever it may be. That's what you're going to give your cushion of your stop loss. Okay, so this is the daily time frame. Let's go to the 4 hour time frame. All right, so 4 hour time frame is bullish just as the daily was. Our future is bullish. So we have a bright future, but it looks like it's getting tight. Okay, you can see the volatility in the market just by how wide the Kumo is getting, and you can see that volatility. First we were in a nice run upwards, a nice bull run, and then you can see that right here, but then we got into this volatility, and here it is right here. Now it looks like the market may be retracing, may be dropping down. You had the day's not over, so we still have roughly, looks like 3.5 hours left to trade. So I'm not trading anything now. I closed out my trades and everything. I'm not trading anything. I don't really like to trade on Friday, and I'll stay in a trade if it's a good trade that I think has more upside to it. But looking at this chart here, you could see these levels. We're on this support level here. This level is holding that support. Now what we would want to see is price break above this level. See this level hold, and then we want to get above the cloud and want to get above this Kijun-sen. Now usually when you get on the other side of the Kijun-sen, you could look for the market to either retrace, to have a trend change. Let's put Fibonacci retracement levels in. If we took them from here to here and figured that the market was going to continue the upward move, then we would be looking for maybe the market to drop down to the 50% retracement level, or one of these levels, 38.2, and that's where it hit off right here. 50% retracement level would take us down here, so you probably get a break of the cloud, and then maybe this level might not hold, break, and then the market may move back up. So I'm not real sure here. And what you want to do, traders, don't ever take a trade unless you feel really comfortable with that trade. When you take a trade, know that, yeah, I've done everything is right, all my setups are right, and I feel confident about the trade. Don't have things in the back of your mind saying, well, I didn't wait for the candle to close, and I really didn't obey that support and resistance level, or I didn't have the crossover, the TK cross, or I was still under the cloud. Things like that. Those will mess up your trades, and you want to be able to say, I've done everything that I could on that trade, and if you lose that trade, then it's just one that you lose, but it will keep the odds more in your favor if you're doing everything that you're supposed to do. Right, so this is on the 4-hour time frame. I don't know, I wouldn't really mess with this right now until I get above this cloud, get a break above this cloud level. You could be coming into a slight range here. You're inside the cloud, and the range level looks like it could fall here, maybe this level here. So maybe you want to get above that level before you take anything long, and then looking where your top would be. Is it even worth it? Wherever your stop loss is going to have to be, your stop loss is going to have to be down here, and it is in this slight range. You're here, and we came in here, and we're hitting off of this level. So inside the cloud, telling us we're in a range, so it's turbulence. We don't want to mess with this pound dollar right now. Let's go to the Euro Aussie 4-hour time frame. A few things with this Euro Aussie. You could see we were in a downtrend, then the market broke, hit the bottom here. This is a strong support level, and then the market continued to move upwards. I was in a trade here. I closed it out. It's Friday. The market started pushing back down, and the market started getting slow. Now what I'm looking for is a few things. First of all, we know this bottom is a strong level, and why? Because you can see here where we bounced on this level, and then look how price took off away from that level. Look at that big long candle taking off away from that level. So this level has to be a strong level. Somebody important is looking at that level and trading that level. And then what did they do? They took it all the way to this level. So this level has to be relevant too, because I made this area to let you see that price came all the way up to that level with one big candle. But then on the other side of that, once we got over here, price shot away from that level. Look at how big it shot away from that level, and then price really came back to that level again. So this level is being played a few times, and it looks like a strong level of support and resistance. A lot of supply and demand at this level. Okay, and so then now what I'm looking for, I got out of the trade, so what I'm looking for now is maybe a retrace back to this level. If I retrace back to this level, I can take a trade put a stop loss below my fractal level, and then I can ride this, you know, to my next level that I have up here. We don't know how far this could move. This could move pretty good. I don't have my support and resistance levels on here. So what we would do basically is just look for the bounce of this level. The bounce on this level at 52.65. That's what I'm looking for. And then I have my stop loss below this level here at roughly 51.86. I know where my stop is and my level that I want to enter the market, and for me to find the targets that I wanted to shoot to. One target would definitely be at this level right here. You can see about 55.33, because this is the flat bottom of the Kumo here, and it's going to be a strong resistance level. Another level that I can see that may be relevant, and that flat bottom pretty much lines up with that level. I could come down a little lower, come down to this level here, which is going to be 54.83. You can see we have this bounce here, and then we have this bounce here off of 53.84, and then we have a bounce here off of 53.84. So maybe the market moves up to that level 53.84. Then we want to see if it breaks that level, and if it breaks that level, we still have to contend with this level here, which is going to be a strong level of support, of resistance rather. And if we can get through there, then we'll look for that double top. All right, so this is long-term trading here. This isn't going to happen overnight. This is going to happen over days or weeks. Okay, so but the main thing, we want to see a bounce off of here, and then you can take this on a short-term trade right to this level here at least. So if you bounce here, then you can look at a first target as this level here. So you get a bounce on this 52.65, and then maybe you take it to this level here, which is going to be 53.58, with a stop loss down here below this fractal level, which is what, at 51.90. So that'll be really short term. Now if we don't get the bounce here, then we want to put a level here, find what that support and resistance level is, see if we break this level. Alright, so this may be a resistance level, so we put a little line here, see what we get at that level. Price may bounce on that level and range for a while before it breaks out and moves to the upside. So be aware of this level. If you don't get in the trade down here and you're trying to enter the trade here, there's going to be a few things that you could do. Let's show that real quick. Ideally, I want to see price bounce off of this level again, 52.65. If I can't get that, then we'll wait till price gets up here. Maybe we play the breakout, or else we can play the break, and then price pulls back to that level and then goes again. So there's so many things you could do at this level. So you have to pay attention and see what happens. You have to look at your candlestick, see what kind of price action you get. Now you could range in this level also. You have that level here, and then you have this top here. Maybe we range for a while, because sometimes the market will range in an area before it breaks out of that area. So just because we reach up to this level doesn't mean we're going to break that level. So you have to watch and see, look at these candle formations and see what kind of price action you're getting around that area. All right, so that's Euro Aussie 4-hour time frame. CAD Yen daily. This is a CAD Yen on a daily time frame, and just wanted to see that we have this strong move down, and then we had this retrace. We got on the daily time frame, we got a nice pin bar so far, so we may be getting some more upside, but you could see how the momentum is showing that we're strong to the downside with this Kijinsen in here. And I have my levels here, my support and resistance levels. This is going to be a relevant level. We're at that level, bounced off of it. Now we came back down to this level, bounced on this level. So will price move back up, or will we break through this level and continue downwards? Let's go to the 4-hour time frame. We're bearish on this. You can see this strong flat top right here. This is long. The longer these flat tops go, the more support and resistance they become. Levels where the market's going to be retracted to those levels. So on the 4-hour time frame, we were bearish, sorry, on the daily, and we're bearish on the 4-hour time frame. So we want to be looking for a short opportunity. Here's where I put my trend line in on this time frame. I put it in on the 4-hour time frame, You can see that trend line there. Okay, so let's move this so we can see it. And you can see my level here, my support and resistance zone. So this is here it was coming down, it was support, then the market broke, it was resistance. Market moved up, hit it again. These levels are so important as resistance. I know I don't want to get into a trade right at that level. Then it broke it and hold it as support, but then finally it took a long big candle to get out of that level. This level must be very relevant for a big candle to come out of this level like that. All right, so we also see a big candle taking off out of this level. This is a strong level down here of support. So we're at the market, we're at the level here, right at the Kijinsen, at the Kumo here. A few things we want to see. Now price already is above this support level here, so we're above that level. We want to see what happens next because we're in the downward trend. We want to see if price is going to move up farther or is it going to break out of this cloud to the downside. Now if we move up, I'm still going to be pretty bullish on it, bearish on this trade, because what I'm looking at is we already are below this trend line. We're below the cloud, we're below the Kijinsen. Okay, so all the things that are telling us our trend direction, we're below those, saying that we're bearish. So we shouldn't really be looking for anything long. If you are, then you're trading against these odds here, the way that the market's bias is. Okay, because look at this trend line. You're below that trend line. This is our trend line. You're below our trend line for the Kijinsen, and you're below the cloud. Okay, but now we're inside the cloud. If we bounce off of this Kijinsen up here, price may move up to the Kijinsen. I don't think if we get to the top we're going to get outside of this cloud. The only way I'm going to trade this long is if we get up past this level here. So I look to get up past that level before I go long. So what I'm looking for is maybe, I don't know how far we're going to move up here. If we don't move up too much farther and we don't go past this fractal level here, what I look for is a break of this level and hold the fractal level as my stop loss, and then trade it down to this level here. This is a strong support level here, down here at what's this level, 91.09. So basically 9100, pretty close to that. Then you have this 9211, which is going to be the support level right at the bottom of this of the Kumo here. So we want to see what happens here in between this, between the cloud and the Kijinsen here. So we want to see if price is going to bounce off of the Kijinsen, or are we going to continue and come outside of the cloud and have our breakout like we're looking at. We broke out once, bounced off, and then we broke down. So a good level, there's two good levels. If price can break through this level, we can put our stop loss up here at the fractal, or else we can even look at another level to enter the trade, would be this fractal level here. So we could get in right here, a break of this fractal level, and I probably would just move it up to the close, the open and closes here. So this fractal level, we break that, if price could come back down and close below 91.94, we got a stop loss up here, and then we're shooting down here. Your stop loss up here is roughly at about 92.43. That's what I'm looking at. So that's what the way I would trade that. Now all this will be irrelevant if price comes and gets above the cloud. Now price may come, get up here, and then start to roll over and then come back down. So you have to be patient, wait and see. Don't rush your trades. All right, feel good about your trade when you get into it. Don't have all that mystery in your mind saying, well, what could happen because I did this or I didn't do that. Feel good about your trade, and you can walk away from it and let it do what it's going to do. Aussie yen 4-hour time frame, we're going to see how the momentum has died here, and when this momentum dies, we're in a range. Okay, you can see the momentum died. And how do I know that? Because the Kijinsen is flatline, it's no heartbeat, it's dead. You got a little heartbeat there, and boom, it died. So when it died, the market died. So when the market dies, the trend dies, and it stays in a range. And here's the range. You can see the bottom of the range right here. That bottom is at 91.15 and your top is at 92.86. All right, so we were bound. You even have it back here. This level held, came close to that level, then we fell out of that level, bottomed, came back in, and we're in this range for sure now. So the only way, looking again, you can go long off of the break of this fractal level, have your stop loss at this fractal level, and you'll shoot for to get past this level if you want to go long. And ideally, if we can get through that level, you'd be at a really good target area, because the main thing is you're going to get you got a nice stop loss, and this will be your level that'll hold for you. Price will break through that level and you can shoot up all the way up to here, which is at roughly at the 9400 level, 94.0. Now on the other side, if price breaks below the cloud, be aware of this level again. So even if price breaks below the cloud, we may just be falling into that range. So don't look at the breakout as real relevant here. You know, price comes down and gets to this level. Look at this level as relevant. Now you break this level, you can trade this all the way down to this level with a break here. All right, and then it all depends what happens here. We need to see more information before we could come to anything. All right, so I want to see price do one of two things: get above this fractal level, I could enter the trade. That'll show a little momentum, and then see if price can move through this level here, and then that'll take us up to our level that I showed you. Or get below this level here. This is what's at 91.15, and then we can start looking at our downward bias. All right, so that's Aussie yen. Let's go to Euro yen 4-hour time frame. This is a nice looking chart. Some levels on here, and we have our levels already drawn in, so we know where our targets will be if we were getting into a trade. This will be my next target, but right now it looks like we have rejection at this level here, this support resistance level. That resistance level comes in at 140.91, so that's resistance right here. And then we want to see what the market's going to do here. It looks like we're trying to break this level, but I see this pin bar. This could be a false break here with this moving upside and then coming back down. The market will come back down. We're in an uptrend, so we want to try to find the bottom of this, okay, because like this would have been a great opportunity to get into a long trade, take that long, and then you stay in that market. But it's such a long candle, it's hard to get into. So we want to see if we could get into something that pulls back again. So there's a few opportunities. If price does come back and doesn't hold this level, if this level is not violated and it honors that level, we come back down. Then we want to see if price can bounce off of a few levels here. This is going to be the previous week's high. This level will change because of the new week, so we'll have a different level here. But we can come down to the Kijinsen here. That's going to be 50% retracement of this move, or else we could come all the way back down to the trend line here, which would be around the cloud area, and then look for a nice price action trade to get into the market. Now you can see right here, this is the daily Kijinsen. Ideally, if we pull all the way back to that level, this level is going to be a strong support level for us. That's where we can get into a trade and ride this up to this level and hopefully break that level and continue upwards. Okay, but there's so many different things that can happen. You just have to look at possibilities and wait to see what the market does and what it shows you. Right now it's showing me that it's above this level. It's not even thinking about coming back to this level yet. So I have to wait. I have to be patient and wait to see if that'll happen. But if not, there's other things I can do. I have a break of this level, but it's Friday, so I can't trade that. So I'll wait. If it does stay above this level, what I will do is wait for the retracement of this level to get back to this level, because the market gives you opportunities more than once, sometime. And I showed you on some other charts or some other videos where the market gives you more than once at these levels. It can pull way far away from that level, and if you're patient, the market will come back to that level and you can get in a trade and ride it back up to that level. All right, so that's just about being patient and waiting for the trade to come to you. So Euro yen, that's what I'm looking at there. Pound CAD, look at this chart. This is strictly bullish. There's no way you want to be thinking short right now. All right, I just wanted to show you how strong of a bullish trend that is. All right, and then I drew my trend line on the 4-hour time frame. So we'll go to the 4-hour time frame. You have a rejection. I didn't go back to that. I might go back to that, show you guys that rejection on the daily time frame. On the daily time frame, you got a pin bar at this level that's developing. Now the candle's not closed yet, but it looks like if that candle closes, you have a pin bar at that level, which will show this level is being rejected. So we may get a pullback somewhere in here. Maybe we pull back to this trend line, pull back to the cloud, to the Kijinsen. These are levels you're going to have to look to get into the trade. And once you get to those levels, you look for a long opportunity, because you're going to look at for some price action candles to get into that trade to ride this long again. We're thinking long because what we saw on the daily time frame, what we see on the 4-hour time frame, we're above the cloud and everything. So we don't want to be looking for any short opportunities. Now you could play a bounce off of this level, and it's Friday, so you really wouldn't want to do it now. But you had this false breakout, and then this level's coming back, coming right back in here. Took out all these people up here, got all these traders that were looking for a long opportunity, came all the way back. Now we're inside here. May drop down 50% retracement level, maybe down to the trend line, and then take back off again. Now totally die out and think that's no good after we break the cloud. So we need to break the other side of the cloud. We break this trend line, get below our trend line, which is the Kijinsen, and then break this drawn in trend line. Then we break the cloud here. We definitely change the bias on the 4-hour time frame, and then we'd have to break this low level here. So put your support and resistance levels in, and you'll know where you need to look for levels to be broken, look for levels to take profit, or look for levels where you could get into a trade. All right, so here we, like I said, this level looks like on the 4-hour, on the daily time frame, you got a pin bar at this level, and it's being rejected at the daily time frame. And on the 4-hour time frame, you had the false breakout and a big candle coming back through. So this may drop a little bit. I'm going to look for a price action level trade to get into this long trade again, and maybe right up to this level and hopefully get through that level. Because if this is just a pullback on this long run that we've already had, now eventually the market will have a nice pullback. You can see how on that daily time frame how steep the slope was with no relevant pullbacks. So you're thinking maybe you're going to get some kind of a pullback, but you can't say the market's going to do this. You have to, you can anticipate, but you have to always play what you see. And I see the market moving upwards strong. I don't see any retracement. Once I start seeing signs of a retracement, then I can look for levels where the retracement may move to, or where the retracement may where I can get off of that level and trade for a long opportunity. All right, Aussie CAD, let's go to daily time frame. You can see this is a nice strong move upwards again. Now you have this level up here. I have two levels because that's going to be my zone. You can see this pin bar rejection on the daily time frame. So maybe we're getting a pullback. Price hits this level, maybe it pulls all the way back down to here, to this, what's it, 98.28. Our zone is between 10025 and 10026. So 10025, 10046, that's where my zone lies in between. Now on the 4-hour time frame, we saw the rejection on the daily. All right, so that strong pin bar rejection on the daily time frame. And if traders had this level, just this level put on their chart, you got a false breakout, you take that breakout and price came back taking you out. Now we're looking for a few things. We look at for a bounce off of this trend line that I drew here. Got a nice trend line here, or a bounce off of the 50% retracement. So you get that 50% retracement, which is the Kijinsen here. If we can find some price action candles to break that level, now we can wait for price to bounce off of the cloud maybe, because you can see that flat bottom. So there's again certain levels that you're looking at. And then finally, if price breaks this level, this cloud here, I would play a breakout here because of two things. I can put a tight stop loss right at the above this cloud, and it wouldn't be much of a risk, and I know I'm going to shoot for this level first, okay, because we saw the big rejection on the daily time frame, and looking at the daily time frame, we would think that possibly the move would be down to this level, but we have to wait and see. So nothing relevant yet, nothing to trade at this time on Aussie CAD. Aussie dollar daily time frame, again, there's two things. You can see this move here from down to here to here. You had a 50% retracement level. Here's the 50% retracement level, and here's the move. So it came down to this level, 50% retracement level. So now we'll take that one out. And then now the move continued, right? So you have a move downwards, and then it's retracing 38.2 right now. You may get up to the 50% retracement level, but this has been such a strong bearish market that I'm still going to be looking for short trades. But let's see what the 4 hour time is telling us. Now on the 4 hour time frame, a lot of times that's where you'll get your minor trend will start there. So you have your secondary trend will start at that level. But on the 4 hour time frame, to me it looks like we could be bearish maybe. Need to see a few things happen though. Let's see where we are here. Okay, so you had the bounce at that 38.2 there, then you had a 38.2 bounce here, and so this level is holding strong. Was it 90.726? That level is holding strong resistance. And then you can see we're underneath the trend line, our Kijinsen. So we're underneath of that. You had a bounce off of that level, and then you had a little slight break of the cloud here. Now you may get a pullback a little bit. You see this flat bottom here, and then we could look for a short trade. I'm gonna be bearish on the short term. On the long term, I'm bearish because look at the other chart, the daily. That is very bearish, and this 4 hour time frame is bearish also. We were bullish with this secondary trend right here, so this pullback, but then I think we're back in line maybe with the primary trend, so that'll take us back down again. So we're gonna look and see what happens next week, but if we stay below this cloud, we'll look for levels to get into the short opportunity. All right, so that's Aussie US dollar 4 hour time frame. Everyone's favorite pair, Euro US dollar 4 hour time frame. I don't really trade this pair, so I really don't have much to say about it. I don't even know why I looked at it, but you can see this long rejection right here at this level. This level is going to be very, very strong resistance level. So right now we have price moving upwards. We had a retracement level, and then price is rejecting this monthly high. This is the previous month's high. It's been rejected at that level. If price breaks that level, look for it to move up to this next level here. But with your stop loss, I think you're going to have your stop loss is going to be just as big as your profit. So I probably wouldn't even mess with this, and I don't trade this pair anyway. Now for me, I would wait. If we do get above that level and you take that long, then you would definitely look for this level to take profit, or see where we're gonna break, if we can break that level. Now if we can break that level, we can continue higher, but I think that's a strong level there. You could see how many times it got hit there. You could see the big long rejection. All right, so nothing really on the euro dollar. Final pair is US dollar yen. The dollar yen has probably been my worst pair to trade. It's been so many times it's done opposite of what I thought it would do, and you have to be really careful on this dollar yen. And you would think it'd be one of the better pairs using the Ichimoku system. You could see the 50% retracement of this move. So price came down, so you have your downward move already. Here we were moving up, we retraced, and then now we retrace back up to a 50%. Well, actually right here we're at a 38.2 retracement level. We didn't hit this 50% retracement level. Now we're below the cloud, so we're going to be looking for short opportunities, and I wanted to get in on a pullback to a level, and this would be a great level right where this Kijinsen is here, which is going to hold us as support and resistance. And this is also the daily Kijinsen level right here. This is a strong resistance level. So we'll see what happens next week when the market opens up. But if I can get a bounce off of this level, nice price action at this level for a short trade, this is the level I want to be in. Okay, this is where the level I want to be at, and that's at 102.79. That's a nice level for a short trade. Now if price breaks that level, you may see it break that level and get above here, maybe 50% retracement, 61.8. But be careful, because I think we're going to see some downside on this still. All right, breakout traders would want to wait and take the break of this fractal level here, or the break of this level here. It'll make your stop loss bigger. You want to try to get closer to this level and take a trade. So that's dollar yen. Just some quick overview of what I see on the markets real quick, and we'll try to start focusing more on maybe one or two pairs, and we can really discuss those pairs and see what we see. Looking at this many pairs, it takes a while, so we rush through it. But hopefully it's helping you guys, and I'm gonna continue to make videos. I'm gonna continue to try to help you guys, and I'm gonna continue to try to find ways to make things better where I could do more. But until the next video, God bless. So long.